Did you know the forbearance program changed the housing market? I'm Glen with Realty One Group West, and I'm going to discuss forbearances and what effect they had on the housing market. When the pandemic hit in 2020, many experts thought the housing market would crash. They feared job loss and economic uncertainty would lead to a wave of foreclosures, similar to when the housing bubble burst over a decade ago. Thankfully, the forbearance program changed that. It provided much needed relief for homeowners so a foreclosure crisis wouldn't happen again. And here's how forbearance worked. Forbearance enabled nearly 5 million homeowners to get back on their feet in a time when having the security and protection of a home was more important than ever. Those in need were able to work with their banks and lenders to stay in their homes rather than go into foreclosure. Marina Walsh, Vice President of Industry Analysis at the Mortgage Bankers Association notes, quote, "Most borrowers exiting forbearances are moving into either a loan modification, payment deferral, or a combination of the two workout options," end quote. As the graph shows, with modification, deferral, and workout options in place, 4 out of every 5 homeowners in forbearance are either paid in full or exiting with a plan, and they're able to stay in their homes. Since so many people can stay in their homes and work out alternative options, there won't be a wave of foreclosures coming to the market. And while rising slightly since the foreclosure moratorium was lifted this year, foreclosures today are still nowhere near the levels seen in the housing crisis. Forbearance wasn't the only game changer either. Lending standards have improved significantly since the housing bubble burst, and that's one more thing keeping foreclosure filings low. Today's borrowers are much more qualified to pay their home loans. And while the majority of homeowners are exiting the forbearance program with a plan, for those who still need to make a change due to financial hardship or other challenges, today's record level of equity is giving them the opportunity to sell their home and avoid foreclosure altogether. Homeowners have options they just didn't have in the housing crisis when so many people owed more on their mortgages than their home were worth. Thanks to their equity and the current undersupply of homes on the market, homeowners can sell their homes, make a move, and not have to go through the foreclosure process that led to the housing market crash in 2008. Thomas LaSalvia, chief economist with Moody's Analytics, states, quote, "There's some excess savings out there, over $2 trillion worth. There are people that have ownership of those homes right now that even in a downturn, they're still likely to be able to pay that mortgage and won't have to hand over keys. And there won't be a lot of those distressed sales that happened in the 2008 crisis." The forbearance program was a game changer for homeowners in need. It's one of the big reasons why we won't see a wave of foreclosures coming to the market. If you've had any thoughts of selling or buying, give us a call and we can discuss the best options in today's market. Thank you for watching, and be sure and leave a comment below. And if you'd like to see more videos like this, please be sure to subscribe to our channel and hit the bell to get notifications of future videos. And we'll see you next time.